Welcome to 𝐏𝐑𝐄𝐃 talk about investing, finance, and professional development. At the current time of 4:15 p.m. on Eastern Time on September 1st, Ethereum $100,574, up about 1.4% so far. On the over crypto market and equity market on this Thursday so far, I would say collectively, 75% of the day has been, relatively red, right? But as we approach the remaining 25%, starting around like 3 p.m. Or like 2:45 p.m. on the Eastern Time, we start to see some sort of a revival, reversal, knowing the fact that with respect to the technical front, if you look at that on an hourly, also on a daily chart, across the spectrum has been, relatively submerged, right? So the market will, naturally just pull up as you get to a relatively oversold level. So what are some of the catalysts that we need to look out for, and why is it red the whole entire day so far? Is mainly because of the fact that, well, firstly, the bond yields has been rising, right? You saw the 10-year yield spiking to 3.25%, almost like 3.3% early, basically the whole day, despite the oil prices has been dipping. Basically anticipating the Friday, August employment report that's coming out. And basically a lot of economists are expecting that the report will be running relatively hot, right? And the expectations for the job number should be somewhere around 318,000 jobs to be added in August, and the unemployment rates to be holding just steady at 3.5%, according to economists from Dow Jones. So that's basically our marching order. Do we stay with 318,000 jobs? Do we stay with 3.5% unemployment rate? If we don't, obviously, we could lead to more aggressive Fed's movement or action going forward. So it's quite binary, right? We ultimately do not know, right? But if we know that the numbers, came out to be negative, right? The Feds will do whatever they need to do. And I think Jerome has already given us a verbiage on the previous Jackson Hole meeting. During his speech, he did use a lot of aggressive vocabularies, depicting that the Feds will be doing what it needs to do domestically. But on the other side of the world as well, the European nation and also other countries are also saying similar verbiage as well, that they need to do whatever it takes to fight inflationary pressure going forward. And also, obviously, we have seen a lot of corporate companies announcing that they will be doing some layoffs, like 20% there, 20% there, while at the same time with higher cost of goods sold, squeezing profitability margin. It's going to be interesting to see how the earnings will be coming out, depicting Q2 down the road, or Q3 in this case, right? So let's just dive into technical to see what's going on with respect to recording time of 4:19 p.m. on the Eastern Time. Ethereum $100,574, up about 1.4% so far. On the over crypto market, right, we can see that we are, at the head and shoulder pattern. And right now on a daily, we are looking to glide down, plateauing, and also try to rebound, right? And the next level of resistance is going to be somewhere around 50.80 out of 70. So it is quite, I would say moderately extended on the daily. Looking at the weekly, we could see that we are crossed up for quite some time. At the same time, the next level of resistance is going to be somewhere around 48 out of 70. Or the next level, if we get more propellant, to 55 out of 70. So it's relatively moderately extended. So as we approach, obviously, tomorrow job number, as we get closer to the FOMC meeting, and obviously the CPI report that's laying on somewhere around, I believe, September 13th, and then the FOMC meetings on the 20th and 21st. Correct me if I'm wrong on the dates, but it's going to be laying around like the second week and the third week, which are the macro catalysts, as we are, completing with this, this week so far. I do hope that tomorrow the job report will be a little bit more lenient, and I hope that we are meeting with expectation because the market has been trying to price it in so far. So if we are just meeting expectations tomorrow, we should ideally see a green day tomorrow, right? As we have a long weekend, which the Labor Day is upcoming on the 5th on Monday. So hope you guys all have a good weekend ahead, a long weekend ahead, right? So on a weekly again, right, quite bearish, but on the monthly we are quite bullish. So again, right, seeing some volatility in the near term, on the daily and the weekly triangulations. As we get over the hump, Q4 should ideally translate, or late Q4, I mean, or Q1 should ideally see some reversal, some bullish pressure, right? Bitcoin is quite bearish, bullish on the monthly. On the weekly and daily, right? Again, we talked about this many times ago. That weekly is quite flat, right? While at the same time, daily is looking for elongation, gliding down right now at 36.61 out of 70, going up to the next level of 40 out of 70. And again, right, Bitcoin is trading on a different momentum, so it's a lot more stable. And it's good that we are reviving back up to be about $20,000. So we've been like kind of hovering around like the 19,000 throughout the day, right? So, anyways, so again, like we know our marching order. So let's just hope that tomorrow the report will be come out in alignment, right? And again, the number is 318,000 and 3.5% unemployment rate, right? And so today is the first day of September, so I hope that you guys are resorting to the time, knowing the fact that today would be the ideal date to subscribe to our Patreon, which we have, basically quite a lot of information that I'm posting on a day-to-day basis, right? We have the politicians, daily trade updates reports, we have the BlackRock and ARK Invest trade reports that we post on a daily basis, and obviously we have the crypto and stocks buy, sell, hold signals reports that come out every single day. So if you study those well, you should ideally make some decent return, right? And if you guys need tutorial or need some sort of guidance, feel free to subscribe, and I'm always pretty responsive on the chat. And let me know how it goes. All right, appreciate you. Take care.